Yeah, you could potentially cut your tax liability by deferring your 2024 401k contribution. The limit is 23,000 for 2024. And then if you're 50 and over, your limit is 30,500. So both your traditional and Roth IRAs, if you're 50 and over and you're about to retire, you can defer $8,000. And then if you're a small business owner along with your 401 contributions, that the contribution limit for the 401k, like I said, is $23,000. But if you have a simple IRA, that simple IRA is basically for small business owners, or some employers do offer that. That $16,000 is what you can put away for your contribution limit for 2024. But if you're 50 and older, it is 19,500. So what you can do like an automatic transfer from your paycheck or checking account to your retirement account. So you can think about putting extra money away for the year. So don't let the large numbers kind of convolute you. Just divide that number by 12 and come up with a monthly amount. That way, that can help reduce the tax liability, especially if you don't want to touch your federal withholding. So that is just something that I did think about after the fact. So,
Gotcha.
all right.
Thank you. Yep.
You're welcome.
Welcome everybody back to another exciting show of the About That Water podcast, where we help you build strong financial habits. My name is Anthony Weaver, and we have a lovely opportunity to talk about taxes post tax return. If you already did it, this is the episode for you to get prepared for the next year. But also, we're going to talk about these tax services from the one and only Angelina King from 718 Tax Services. How you doing today, Angelina?
I'm doing well. How about yourself, Anthony?
I am doing good, but also I feel broke after paying for these taxes this year.
Well, I appreciate you having me back to talk about after the deadline. So yeah, there's a few things that we can definitely cover. So,
all right. So what is, like, now that tax season is done, and some of the people who don't have businesses that are just straight W-2 workers, I'm gonna just tell you a scenario. One of my buddies had just hit me up. He was like, "Hey, I haven't heard anybody talk about this yet, but taking advantages of the pre-tax services, as far as like dumping money into your IRA." But he's also a teacher. He didn't know that he had access to a full 57. So can you kind of talk about some of those tax avenues that people can kind of take advantage of now for the next tax season?
yeah, especially if you are on the side where you know that you're going to have a tax liability, it's best to go ahead and, first of all, look at your withholding for your employer. Do that first. It's a good time. We're in the beginning, well, the end of the second quarter in April. However, what he can do is actually contribute more to his retirement plan. That way, it'll kind of offset that withholding. I know a lot of people look at their withholding like, I want more during the year in my paycheck. But see, that's kind of setting you up for failure, because at the end of the year, when you do file your taxes, you may have a tax liability, which several of our clients were shocked about that this year because they didn't withhold enough. Make sure that federal withholding box, it's box number 2 on your W-2, is not 0. If it is, you need to go to your HR department and change that quick, fast, in a hurry. But in order to offset some of those contributions to your employer, if your employer matches your contributions, whether it's a 457, 403, 401k, whatever it is, investment vehicle, or you can also reach out to an investment advisor to open up a traditional or Roth IRA. And those contributions are going to help you offset your tax liability for the year. Other thing that you can probably do is I went over the review the paycheck. I did have some notes here because
Oh,
I
thanks.
knew you were going there. I kind of figured you were going there because our latest our latest newsletter that's coming out, we're going over that. Especially when it comes to the net capital gains and losses. You might want to take a look at some of your brokerage accounts if you do dabble in the stock market a bit for your investments, and you can probably tax harvest, which meaning look at some of the investments that are losing in your portfolio, and maybe you want to sell them in 2024 against some of the gains that you have, so you can have that offset as there as well. If that doesn't make any sense, please reach out to us and we can kind of go over that with you. I'm not a investment advisor. Your investment advisor through your brokerage, account. Like, I don't want to really name the ones out there, but we know the big box ones, but I don't
Yeah.
want to advertise for them and get in trouble. But through your employer is one, and if you have a separate self-directed fund, you reach out to those financial institutions to, help you with the tax harvesting, because having those gains and losses is going to really help you in 2024, because the standard deduction has gone up a bit because of inflation. However, you want these other factors as a W-2 to kind of offset those things, if that makes sense.
It does. So, I mean, one of the things that offsetting some of these processes, because I think last year or the year before when you and I were chatting, we went through the IRS website as far as going over the W-4 or the withholdings
Yes.
form. So, for those of you who are not too familiar with that, we'll put the link in the show notes about where you can actually do your withholdings calculations, and you just take that form to your HR department for processing.
Correct. Yeah. And if you can afford to take an additional $25 to $50 per pay period to offset some of that, that's going to help you as well, because being a single person under the single filing status, you're going to be hit harder, because even if you're single or married filing separately, that standard deduction increased to about $14,000 in 2024. Let me get you the right number, 1,600. That's up from 13,850 in 2023. So yes, going to the IRS withholding, there's an online tool that you can access. Have your paycheck. They'll tell you what items that you need while you do this exercise. So you can adjust your withholding, but an extra 25 to 50 up to $75 taking out withholding. I'd rather you overpay than you underpay, because when you underpay, I mean, if you owe the government $100 or $200, that's fine, but make sure you pay it immediately. I don't think something like that you need a payment plan for.
No.
If you do, I mean, even for you to start the payment plan at the IRS is going to cost you. So if you have $100 or $200 that you owe, go ahead and write that check and send it off and get that off your plate. Just know, I do want to also point out, when you do owe the IRS, it's not being reported to your credit report. It's not, unless you default and don't uphold your agreement. Then they start putting things on your credit report, and that takes a while, but that is just like a bill that you pay, similar to your Wi-Fi bill. They're not reporting that to your credit unless you are in default and don't pay.
Wow.
Your electric bill, same thing. Those are not reported to your credit report unless you don't pay your bill and they shut you off and you're in the dark, then, because they are trying to collect that debt. But those are some of the things that W-2 workers need to be aware of. But if you do owe and you've been owing year after year, I think you need to look at your W-4 form to update that. And that online tool at the IRS will help you, because your W-2 at the end of the year, you're underpaying in taxes.
Right.
Yep.
Yeah, I mean, because that's what I gotta do. I know that for sure. They was like, you need to change your joint, but in the meantime, you gotta pay us this money. I was like, what? Y'all not gonna give me a chance to adjust this right quick? They was like, nah. I said, you gotta pay this money.
Yeah. I mean, after the tax season is over, it's like what happened in 2023, you have to deal with it.
Yeah.
But going into 2024, let's stop procrastinating. Let's look at it because we're about to approach May. You
Mm-hmm.
know, and May and June are great months to look at your withholding because you definitely don't want to check that box that says exempt. Because if
Right.
you do, that means $0 federal holding is coming out of your paycheck. And we don't want that because your liability is going to be more. And think about six-figure earners. They have to take quite a bit out,
Yeah.
you know. And that's an exercise they need to actually look at and adjust that withholding. I can't stress that enough. Use the online tool at the IRS to help you as a guide, you know. And if you have, issues with that, reach out to either Anthony or myself. We'll help you.
We'll walk you through it, nice and easy.
Yeah.
So, all right. So we got our taxes done for the W 2 side of the house, for those of us who are W 2 workers. For the business owners, now, because I know they can actually, is it too late to still file an exemption?
Oh, an extension?
An extension.
Yes, it is.
Okay.
Extension deadline was April 15th. If you are filing on your 1040, which is your individual tax return, because a form 4868 needed to be filed before 11:59 on April 15th. That's
Yeah.
for small business owners and C corps. Could
So,
extend you 6 months, so your return will be due in October.
mm, okay. So if they missed it, can they still fill out that form? And what can they do?
It's going to be rejected. They're not going to
Oh.
accept it. My advice is file your taxes as soon as possible because look, 15 days ago on the 30th, 15 days prior to that was the deadline.
Mhm.
So the better, the sooner you file your taxes will be a less interest and penalties for you.
Say if we filing like together,
Mhm.
right? Married filing together, and the spouse decided not to give all the information in time, but you have your information in, will it still be considered late because of that? If say if one was completed their half, but they never got the other half from their spouse.
Well, it's best to sit down, married filing jointly to have all the paperwork
Mm.
because you want to avoid doing amended returns. Amended returns is the A word to the IRS sometimes, which the A word for those that don't know is audit.
Mm.
But I can see that you left out one or two documents because what you want to avoid, Anthony, and everyone that's listening or watching, is a CP 2000 notice because that's underreporting income. And when you underreport income, the IRS will calculate the tax for you and send you a bill.
Mm.
In order to avoid that, though, it's best at upfront is to have all your information. If you don't and your spouse is dragging their feet and you file, you have no other choice but to do an amended return as soon as possible. Don't wait for them to send you an underreporter notice because it's chaos. Because they're saying this is what you owe. You gotta be sent to the AOR department, which is the collections department. I don't know the acronym right now, but I can get it for you. But they will send you that. You get these letters. You and your wife, or husband and wife and husband, are arguing to say, look, you didn't give me the paperwork in time. We need to do a minute return, but it's best to do everything in one swoop to avoid doing amended returns.
Wow. Okay. Because I know some people they might have that the squabble between each other and missing out. But also say if some people are actually having babies this year, like they
Mhm,
brand new parents.
mhm.
And one of the things that I hear about, like you hear obviously on TikTok or you hear about it on Facebook or Instagram, something like that, saying like you should open up a custodial account for your children. And or like how where could people start putting money away to kind of help out with their taxes so that child doesn't get taxed later on in the when they grow up to like 18 or so.
Well, one thing that you can do, I know in Florida they have the prepaid college program
Mm-hmm.
where as low as $1 per month since the baby's born, you can put away in that. There's 529 programs, but the parents gotta be in agreement to say, look, we're gonna set aside at least $50 a month into the program. When they turn 5, we'll increase that to maybe $200 a month.
Mm-hmm.
Um, but start somewhere or open up a stock account because you can be a custodial for your children. I wouldn't advise putting them on as an authorized user on your credit card just yet, but
Right.
you can help them build their credit. Maybe do that at maybe 5 or 10 years old, so they can start establishing their credit. But don't jack their credit up. Please do not. Because when they turn 18,
For the
like,
light bills and everything.
exactly.
Yeah.
So as long as you continue to pay those bills on time, but great questions. And that year that child is born, that is a tax deduction for you. So if they're born before the end of the year, like say for instance this year,
Mm-hmm.
uh, when you go to file your taxes in 2025 for 2024, you can claim that infant as a dependent, and they have it set right now for $2,000 per child, any child under the age of 17. So, but for savings, I would either do a prepaid college program, depending on your state that you're in, research that, or do a 529 for the children, or open a custodial self-directed brokerage account. And so you
Okay.
put aside because think about it, newborn baby, all those baby products that you're buying, why don't you have those companies pay you?
That is interesting.
Yeah,
Yeah. Might as well invest. Is the dividend accounts too.
that's true.
Yeah.
If you drink a lot of Coca-Cola, buy Coca-Cola stock, Pepsi. Oh, and so I'm sorry, I didn't get permission even to say that. So
I'm not, we not endorsing them. We just
no,
saying
we're
as an
not.
example of
And I
those.
don't want to get a lawsuit,
Right,
but
right.
you know, the type of soda that
Right.
you
This is educational purposes.
products that you use daily, products that
Yes.
you use daily, have that mindset, that perspective, that detergent that you buy. If
Right.
it's publicly traded company, God forbid, I almost said it too.
Right.
But that company that you buy your laundry detergent, you
Hmm.
that could be a an avenue for you to put aside some money and grow that account for your children. So there's some conventional ways to kind of save for that newborn baby. All those
Yeah.
diapers, think about all those diapers,
The diapers, the wipes, the lotions,
formula.
formulas. Yeah.
Yeah,
Anything. But
yeah,
so, because we got that taken care of, we got the baby coming in. Not we, like in general, as far as what we talked about already.
right.
Um, and then we talked about the WT side of the house. We talked about if you have a business. But one of the things that I've come across that I've thought was interesting to bring up, which is say if somebody was opting to get an actual check coming back from the IRS and they
Okay.
lost it, is there anything that they can do?
Yes, they need to contact the IRS immediately so they can stop payment on that check.
Okay.
And there is 800 numbers at their website. I don't think there's an online way to do it, but picking up the phone to call them to
Mm-hmm.
say, look, this check is lost. I need to track it. It's going to be a longer process, but as long as they put that a note on that taxpayer's account to look out for that. And then you have to go through a process for them to actually stop payment on that check and send you a new one. But the best way is electronic deposit, direct deposit.
Okay.
Filing your return electronically, choosing the option for direct deposit is probably the fastest and quickest way for you to get your refund.
Okay. Thank you. And one of the things that was in the news, I thought was interesting that this is recent news. Obviously, this is a proposed bill at the time of this recording, which is to have a capital gains tax at $44,000. I'm sure you heard about that one.
I did. A client of mine actually sent me that and wanted to know my thoughts. My first thought is, I don't think you want to win the election.
Okay.
That was my first thought. Seriously. Because we're spending a lot of money to help other countries.
Yeah.
Really want to skate to the left, not to try to get political, but I'll just say this. At this time, I don't have a comment.
Okay. Fair enough. All right. I figured I asked.
Right. But I don't really have a specific comment. No.
Okay. Well, can we educate the people on capital gains? Like, what is it and why does it matter?
Okay. Say, for instance, you have a security. And I like how you did that. You have a security and you paid $100,000 for it.
Yeah.
Okay. And then when you sold it, you made 125. Okay. Even look at this from a house perspective. You bought a home 15 years ago at 100 grand. You sold it in the current tax year and you made $25,000 on it. I mean, first of all, I want to know where you lived at because you should have made a little bit. But anyway, so that gain of $25,000 is going to be reported on your tax return. Okay. But at the same time, when I was touching on the point of tax harvesting, if you also had another property or some type of security that the flip side of it, that you paid $125,000 for it, but then you sold it for 100. And the same scenario now, keep in mind, because what in my mind, I'm looking at the line item in your tax return. The actual loss of the 25,000 is going to offset that gain that you had. So it's not going to be a really hard hit from a tax liability standpoint. You know, considering you got W-2 income, you got a little bit of small business income on your personal return. So that offset is helping you. So we want to see a loss to lower your tax liability, because if you are a six-figure earner way up here and you had a loss of 25,000 and you also had a gain of 25,000, that net effect is zero from when you report it to your on your tax return. Now, if we just had the loss of the 25,000, that reduces your tax liability, and you made $200,000 that year at your W-2 job. So that reduces your tax liability, your total income, and then your AGI is the same thing. And then from your AGI, we're going to subtract your filing status, which if you're married filing jointly, is over 20 in 2024, it's 29,200. So what we want to really do is reduce your taxable income. So that capital gain or loss can help you or can hurt you from a tax, 1040 standpoint.
Yeah, I didn't even think about it that way.
Yeah. See, I do a lot of tax returns, and I try to educate my clients. I was like, look, just because you said you did horrible in the market or you did really, really good, there's some other factors that capital gains tax could help you. It could hurt you a little bit. You may have a capital gain. I remember a client that he was really scared because he wanted to file with his wife, and he didn't want his wife to eat that that loss or that gain, huge gain that he had. But combining both incomes helped reduce the tax liability because she was a Schedule C, he was also a Schedule C, but they both had W-2 income.
Right.
And it all worked out. If he filed by himself, he was looking at maybe 10, 15,000 liability.
Wow. Okay.
So that higher deduction from married filing jointly helps. You know, everybody's perspective, well, you know, I want to file. Why did you get married in? Everything's joint. You know, but I understand some people's situations are different, but every tax situation is different. So, but I like to give estimates, you know, sometimes, come to me, well, I want to do married filing separately. I'm like, why?
Right.
And I said, well, I'm going to give you some scenarios, you know, so you can actually see. And that's free of charge. You know, anytime anyone wants an estimate, you know, I can put that together for you so you can actually see the numbers. These are estimates based on whatever income that you brought in for the year and any, you know, factors with the capital gains or business income or loss. You know, we put that together so, you know, numbers don't lie. People do.
True. True. That's why we in the business we in there.
That's right.
Right. I'm focused on the feelings. You like numbers and numbers.
Yeah.
Did you spend it or you didn't? Like,
yeah.
That's it.
So with your question about the capital gains being raised a bit, you have to be creative now, because if you have some things that you want to sell and they're not making you any money, well, take it to your advantage. Okay, well, this security is not making any money, but I need cash because because inflation is really killing my household. These stocks are doing great, but also look at those losses to sell too.
Yeah. Okay. This will probably be like the last one before we go to the final four, because you've been on the show multiple times. If anybody want to know more about you, they can listen to the other episodes.
That's right. That's right.
Because I know some people that are planning to retire this year, and they trying to figure out it's a lot of different scenarios, but the most common one that I'm getting at least asked about or told about their retirement is that they want to move to tax-free states, and majority of them want to go down to Florida, and obviously they want to sell their properties up here, which is the reason why I was asking about the capital gains. So when they go to do that, from a tax perspective, should they only look at the federal tax states, or should they look at other factors as well, just from your experience?
Well, from my experience, I did have 2 clients come from this year. Well, 3. One from Minnesota, and the other 2 were from New York. Okay, and they did sell property. So they were actually a little nervous because they made so much money on the house. However, if you're thinking about retirement this year and you're about to sell that house, make improvements to that home if you can afford it, because that helps. Because what I do to analyze, I'm looking at when you actually bought the property. Okay, because we want to look at your settlement statement from when you bought it. You stayed there for X amount of years. Typically, I do recommend that you stay in the house at least 2 to 3 years before you sell it, because there is a exclusion that the IRS does give to taxpayers, and that exclusion for single is $250,000. So that exclusion offsets that liability too. This other lady, she didn't know about the exclusion. Her and her husband, for a married filing jointly, the exclusion in the tax return is $500,000 for married filing jointly.
Yeah.
So as long as that's your cushion, you know, as long as you stayed in that home for at least 3 years, I really recommend 5, but that's just me. But because you want more bang for your buck. But for the taxpayers that wanted to retire and it didn't work out that way because they moved back to the Virginia area. I'm not going to say exactly where, because that gives it away if they see this, because I'm discussing there. But the scenario was they were investment type of couple where they invested in real estate. But see, they stayed in the home less than a year and they made a lot of money. So you don't qualify for the exclusion, you know. And that exclusion, you can find that out at the IRS website. But for those that do that, it's not a big hit to your tax situation. So don't be scared of that. But Florida is a great state. You know, we don't have state returns that we have to do. Our tax rate may be a little bit higher. It just all depends on what county. Tennessee is a tax-free state. Texas is as well.
I didn't know Texas was.
Yeah, they don't have a state return. Yeah, but to look at it from apples to apples from a tax perspective, it's really not going to be that big of a hit if you do exercise that exclusion. You know, if your tax professional does not bring it up to them. Look, I moved, you know, I'm about to retire. I sold my house. I made improvements to my house. Provide them with the settlement statement from when you bought the house and when you sold the house. Any expenses for you to get the property ready for sale or deductions.
Oh, I didn't know that.
Yes. So but from a rental standpoint, you have a better opportunity to write a lot of stuff off. But when you're getting it ready for sale, you're not going to your primary residence anymore. Certain things are tax deductions on there. Like if you put in new floors to help increase the value of the house, you remodel your bathroom to a limit though. It's not, don't be excessive with that, but you know, anything, easements.
The ceiling inside shower heads and everything. Right.
You know, legitimate expenses to upgrade the house to get it ready for sale, stuff like that. If you need a listing, I can provide one for you. Okay. And there's information on the IRS website as well. So I always, when in doubt, go to irs.gov. If you can't find it, reach out to me or I'll pass it on to Anthony, you know, so you can see it. But those are some of the things that you can do.
Awesome.
Yeah.
All right. So before we get to the final 4 questions, is there anything that you want to leave anybody with before we dive into that?
The only thing I would want to stress, if you do owe the IRS, don't be scared. Set up a payment plan, you know, and if you keep owing year after year and you like, I don't understand why I'm owing, use the online tool at the IRS website, because more likely as a W-2 worker, you're not withholding enough for the withholding.
Gotcha.
Yep.
Nice and easy. All right. Ready for the final 4? I think this is your first time going through the final 4?
I don't think so.
All right.
You might have changed the question. But no.
I got you. Number 1, what does wealth mean to you?
Okay, no, I haven't heard that question before. Well, being a good steward with my finances. You know, I always got to stick back to that because for me, the Bible is gospel. You got to be a good steward of your money. You know, if you're going to give 10% to an organization or a church, also pay yourself 10%. Stick that away in an account for you to invest in and see your money grow, because it's better you got 90, if you choose not to do that to pay yourself, you got 90% left, you know, versus that whole 100, because you're going to be pulling out your hair like, I got 100% of my money, but it's not working for me. So for me, that is financial freedom, and being a good steward of my money is because the borrower is a slave to the lender. I'd rather be the lender.
Like, sign me up. Okay.
I mean, it's scriptural. It really is. Look it up. It's in Psalm Songs of Proverbs. Yeah.
I think, yeah, it's said quite a bit,
Yeah.
especially in the financial space.
Yes. 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 Yes.
Number two, what was your worst money mistake?
Oh yeah, I heard this question
I'll
before.
go to that.
Oh man, student loans was my worst. That was the worst. I mean, if I didn't have those darn student loans, Anthony and audience, I think I would be a little bit further. Yep.
Yeah. Uh,
I think that's the biggest fraud. But anyway, let me stop.
yeah, it's another episode.
Sorry.
I have somebody who covered student loans already, so they'll be coming out soon.
Okay, awesome. I look forward to watching that. Mhm.
Number three, what is your favorite financial or non-financial book?
Definitely the Bible. And I recently got a new book by John Hope Bryant. It's called Financial Literacy for All.
Hmm.
And it digs into disrupting the struggle, advancing financial freedom, and building a new American middle class.
That
Awesome.
sounds interesting.
I have it right here. It looks just like this. Let me try to focus it.
It's
Not
not going to
working.
work.
Never mind.
That's okay.
There it is.
Financial literacy for all.
There it is, Anthony.
Oh, nice. Okay, I see it.
Yeah.
Yeah, so make sure y'all have that book. If y'all don't, I think I might have to see if I might have to get that as a giveaway on my next live or
It
something.
just came out. Actually, I got mine on Monday. It just came
Sweet.
out. And then I do have another one. So my three is the Bible, this one about financial literacy. I heard John Hope Bryant speak at a leadership conference, and awesome, awesome guy. And he wants everyone, regardless of your ethnic background, to have, the tools. And this book actually gives you step by step. So that'd be awesome giveaway.
Yeah, and they say like the biggest secrets are kept in books anyway. So if you ever want to get the secrets to life, even it's in a book.
Yeah. And my other one
Oh, you
was,
got 3 books? All right, let's go.
yeah, the other one was When Heaven Went Public. This is the story about how the stock market is by Catrice Wells.
Okay.
And you may not get it on Amazon, but you have to kind of search for that. But it's awesome. I've halfway through this book, and it really opened up my eyes that really, I don't want to give too much away, but the stock market is something that we all should dabble in, whether you are afraid or not afraid, step out on faith. Because this could be your side hustle.
Yeah, I like that.
Yeah. Yeah, but you're going to probably find this at a Christian bookstore, not on Amazon, because Amazon, I think that price of that book is like over $200, and
Oh, geez.
you want to pay $15 for this book or less. So that's it.
All righty. Number 4, what is your favorite dish to make?
Ooh, I like to eat a lot though.
If you just want to say what you want to eat, that's fine.
Oh man. Since I was born in Louisiana, I like the red beans and rice that my mother makes. And it's a Southern dish. It's better than Popeyes. Red beans and rice. But to make, I don't eat too much seafood anymore, but I would like to do like a Southern crab boil, blue crab boil. With the not the tomatoes, but the potatoes and corn, and you put a little shrimp in there, and it has to be spicy.
Okay.
It has to be hot where your neck is like on fire.
Right. Flame. Right.
That's it.
Nice. All right. So the very last question of the show, which is, where could people find out more about you?
718taxservices.com will be, you can send me a message to our client portal, or I'm not really on social media that much, but my IG page is 718 Tax Services. and leave me a message, and we can connect that way. And all my other contact information is on our website.
Awesome. And when you do contact her, just let her know that you listened and found her through the About That Water podcast. So, just kind of everybody needs to know their sources, the analytics on how people find out about them. It's always great.
Yes, it is.
Well, Angelina, thank you so much for coming through again. And I cannot thank you enough for providing so much value and I just say entertainment to the boring tax services. Because I mean, at the end of the day, like you said, the numbers are numbers, and we all need to learn the numbers, the ins and outs of it. But it also helps out for us to understand what they are, so that we are not blindsided or taken advantage of from the people who already know how much we're supposed to pay, and it's a gamble on us to figure out how much we supposed to pay.
Yes.
But, yeah.
Awesome. Well, I appreciate for this opportunity once again, Anthony, and keep doing what you're doing to elevate and advance the kingdom, because we need you. We do.
Thank you. Thank
you. You are welcome.
I mean,
yes.
I appreciate you. Like, you guys, it's really for the people. I mean, it really is. And that's what I'm just here to share.
Yeah, we're here to educate you, because not only I learned things from you, Anthony, as well as, other guests that you have on the show. But yeah, we're here to educate you. And that's how our perspective at our tax firm is to educate you, to let you know where the numbers are coming from. Not just saying, here, sign your tax return, we're about to release it. No, we want to have you don't have to understand everything, but we want to give you a high level view of your tax filing, because some things you may not knew that was why you owed taxes, so, but I appreciate your time, and I love your platform, and keep doing what you're doing. Yeah.
Okay. All right, let me stop blushing. All right, thank you, everybody. Peace.
Peace.